Okay, update on uranium here, September 20th. As always, take a look at the links in the description to check out Cycles Analysis 101. I'm assuming you've already seen that stuff, so you can understand what I'm talking about when I talk about daily cycle highs, daily cycle lows, etc. You'll also get a sense for the broader my broader market update, which talks about the S&P 500. That's important because that is going to dictate the direction of most assets, including and not limited to uranium. So definitely take a look at that. So we'll start with CCJ as always, and we talked about this in our previous videos. We had our daily cycle high on day 13, right? And then, so since then, we had this move down, and then we had this bounce. What is this? That's right, it's a lower high. And what do you generally get after a lower high? A lower low, which was this, right? A low below this. Now we're getting what is either another lower high or the actual trend reversal, and we won't know that until we get more data, until we see more price action on different time frames. So day 14, 15, 16, 17, 18, 19, 20. So this rosy scenario, it's totally possible. Could be that we just got a daily cycle low on Monday, right? And today actually creates a because today actually created a swing low, right? And we didn't actually close. We didn't close above it, but once above 28.53, that makes Monday a swing low, and so that's important. And again, as I talked about in the broader market update, the Fed meeting tomorrow, or I should say the Fed announcement tomorrow at 2 p.m. and the subsequent press conference at 2:30, which is going to give a sense of, what is the terminal rate that they're targeting? How hawkish are they looking to be? That's what the market is really looking for, because a lot of people are expecting we get to 75 basis points raised tomorrow, and then basically, like, we're not going to get too much more of a raise. Like the next few meetings for the rest of the year, we're certainly not expecting another 75 basis points. So if there's any kind of suggestion of something like that, then you're going to see some downside, I would expect. Any hint of more hawkishness, really. But we're really set up for a move up because the market knows so much about this, assuming we get 75 basis points. If we get a 1 point, I don't know, there's a lot of talk out there about 1 point as well. So it's possible that 1 point will actually be absorbed as well. 75 definitely will, honestly. If somehow they just shock the market with, a point and a quarter, that would be pretty catastrophic. All that to say, it's possible we got a daily cycle low yesterday, and so tomorrow we have a bullish reaction to the Fed across everything, and then we keep moving up, and we'll want to watch that reaction to the 29.80 level or 29.89 level, which is where your swing high starts, right? That's the low from day 13, which is your DCH, your daily cycle high. And if we look at the weekly chart, I talked about how this is kind of a little bit murky in terms of like the cycle count, because you had this cluster of lows. Any one of them could have been the low. I think what's important here, though, I talk about this all the time, we are set up for a bullish outside weekly candle. That's a big signal, and it's only Tuesday. So you have time to catch the rest of the move. Now, again, we have the Fed tomorrow, so that's going to dictate. We could have the Fed happen, get bearishness, and this becomes, a massive upper wick, and maybe we even go red for the week. That would happen if we go below 27.20, because that's the opening price for this week. However, what we do have so far is this candle made a low below last week's low. So stopped out a lot of people, I'm assuming, right? Anyone that had their stop set for this candle has been blown out. Maybe they re-entered, who knows? So it took out that candle this low, and then it's gone green. That is the setup for a bullish outside candle. Again, that's a candle that makes a new low and a new high, but closes green, right? So it's moving higher. It's taken out a bunch of stops on the downside, and then it just reversed higher. If you've ever traded anything, you know how frustrating that is to be stopped out and have it go in the other direction. And that's part of the reason why this thing works, because you end up getting people chasing. And so that will potentially take us to 30.86. Now, we would look at the lower time frames for signals of that. Like if we look at the hourly, if we drill into that, you can see this is not a good look on the hourly, right? Like this looks like a bear flag, right, on the hourly. But if we zero in and just kind of get a better sense of like, actually with this kind of up candle, this potentially makes it less bear flaggy, but this does show us that we need to get above this candle here. So 28.23 is your level on the hourly chart. That would suggest we are going to go and test that $30 level. So that's actually not bad. You still have like $2 of upside once we cross above that trigger. And on the monthly level, we've got to be concerned that the month is now red, but it is a doji. I had drawn this diagonal. You can see we're clearly in a we made a lower high compared to this. It wasn't even an actual double top, and so we've got 7 trading days left in the month after we get the Fed data tomorrow on Wednesday. So a lot of time for this candle to take on a different shape, right? Like make a new low, go more red, or we could start to go green and test this declining trend line, test this sort of local high. And so really exciting day tomorrow. It's going to kind of tell us a lot. And again, we know that daily chart setup. It is really setting up for either we got our daily cycle low already, or maybe we make a new low and then we reverse higher and this is our daily cycle low. So it's going to be interesting here. And again, we have that weekly pattern. That's big. We cross above 20, wait, what's the high for this candle? Sorry. 28.32? Wait, that doesn't make sense. Wait, didn't we close at 28.40? Oh, sorry. Apologies. This candle with this hourly candle with the wick, the high for this candle is 29. So you'd really want to break above that level, right? I mean, this is all just consolidation. This inside here. I mean, you could even drill. You can get an even earlier entry, like really maybe break above this chop zone here, right? Like that would get you to like 28.50. So that's another 10 cents if you wanted a sort of quicker entry. I mean, from this vantage point, it kind of looks a little bit like a bull flag on the 15-minute chart. But that's the lay of the land on uranium, again, using CCJ as a proxy.